for today. Before we jump into it, I'd like to begin by acknowledging the traditional custodians of the land on which this virtual conference is being hosted, and the traditional custodians of the various lands where we are linking in from today. I would also like to pay my respects to elders past, present and future, for they hold the memories, traditions, cultures, hopes and aspirations of Aboriginal and Torres Strait Islander people. Today we will be discussing key financial considerations before entering aged care. I am the Customer Relations Officer for South East Queensland for Churches of Christ in Queensland. My role within the organisation is to help families to navigate the process of entering into aged care and making it as stress-free as possible. Remember to submit your questions as we go to 0455 125 697. And now I would like to introduce you to Sophie McClelland. Sophie is the Principal Financial Advisor for Saltwater Financial Group. And Sophie, I'll pass it over to you.
Thank you, Louise. Hi everyone, my name is Sophie and I'm the Director and Senior Financial Advisor with Saltwater Financial Group. My role within this webinar today is to help you navigate the costings of moving into an aged care facility. So I'm a financial advisor and have been doing this for about 16 years now. I'm an accredited financial advisor in the aged care space, and I personally got into this because I had to put my own mum into an aged care facility back in 2006, and I myself was really confused by all of the costings and how to navigate it all. So I wanted to learn this space as a financial advisor in my profession so that I can help people like yourselves better understand what the financial costings were going to be of moving into an aged care facility.
So it's quite a personal process for you.
Yeah, it is. Yeah. All right, so one thing I do want to say is we do have to disclose any disclaimers, so please be aware that any situations or any examples we do talk about today is just general information. It's not relating to you personally, and I haven't taken into consideration any of your personal goals, objectives or personal situations. So if you do need to get financial advice in this space, I do recommend that you seek independent financial advice from an accredited specialist.
So the main reason that we're here today is to start having a think about preparing yourself for aged care, having those difficult conversations with people. And in my experience, the majority of people that I put into aged care, 90% of them aren't ready. There's been an event that's changed their life that they weren't prepared for, and it all comes at once, all happens at once.
Yeah, thanks, Louise. It is important to remember things as well, such as your estate planning issues, making sure that you have seen your local family lawyer or someone down the road to make sure you've got your wills and your powers of attorney all in place before you do move into those aged care facilities.
That's right. So let's have a chat about what aged care is. So we've got our traditional forms of aged care, the residential aged care facility. We've got dementia care that supports people's memory. We've got respite care that people are eligible for 63 days. And this is a great opportunity for people who are carers for a loved one to have a little break and recharge their batteries. We've got palliative care, transitional care and rehabilitative care. And in all of these services and within all of these descriptions of aged care, we provide all the meals, we provide entertainment, we do all the washing for you, so it is really an opportunity, particularly for respite, for people to have a break, but especially with that ongoing residential care, everything is done for people. But within that framework, we do still like to help people to remain as independent as possible.
Yeah. And what's the eligibility to be able to go into an aged care facility?
People need to be registered with My Aged Care, and they also need to have an ACAT assessment. And the difference between residential aged care and retirement living is majority of people in retirement living are still able to care for themselves. They're often at home on a community care package, but by the time they get to a position where they're struggling on those packages and their care needs exceed that, and then they look to come into residential aged care. The requirement that we have basically around that is that they need 24-hour nursing care.
I also know from a financial perspective that we need to get your income and assets assessed by Centrelink. So there is actually an official form that we need to submit to Centrelink when you're going into an aged care facility. And the reason that we want to do that is because we want to make sure that you're entitled or that you receive any government subsidies that you might be entitled to, which can be applied towards the fees. Talking of which, all right, so what I wanted to do today was just, in a very basic nutshell, was go through what some of those fees are that you may need to pay to move into an aged care facility. So the first one is your deposit, or what they call a RAD, or a refundable accommodation deposit. So that is a lump sum payment that you need to pay to move into an aged care facility. Now, on the Gold Coast, that tends to be maybe $350,000 to $450,000. The other alternative way of paying that outside of perhaps just a lump sum payment is you can also pay it as a monthly payment with a little bit of an interest rate applied 4.1% on that. So for example, if your RAD is $450,000, but you only have $200,000 to put towards that, that remaining outstanding amount of $250,000 can still be paid as a DAP payment, or a daily accommodation payment. The best way to look at that, guys, is it's an interest-only loan, technically, with an interest rate of 4.1%. But what that does is it just provides flexibility of how that deposit is paid. The other fee that you have to pay is the basic daily care fee. Everyone has to pay that. We can't avoid it. That's set by the government, and it's set at $52.25 at the moment.
And that's the fee for respite, isn't it?
That is the fee for respite as well. So government sets that. Can't do much about it. That is the fee that it's going to be. They do tend to increase that slightly year on year, but at the moment it's set at $52.25. Then you can have what is called a means-tested fee. So depending on what your income and assets are, will determine whether or not you have to pay a means-tested fee. And Centrelink decide this, and that's what that form is that I was talking about that we need to send in. So the means-tested fee may apply, it may not apply, but it could be something from $1 even up to $200 a day. Now, where someone like myself, a financial advisor, can come in and help is there are strategies that we can look at to help reduce that means-tested fee for you.
And what if somebody doesn't submit an income and asset assessment to Centrelink?
If they don't do that, then they are assumed to be capped at the most, and so they will have the $200 a day means-tested fee.
So
now,
it's in their benefit to have that completed, isn't it?
Absolutely. Now, keep in mind, your means-tested fee is capped over a lifetime. So once you do reach that cap, they're not going to charge that anymore. But we're told that's in $60,000 or so. So ideally, if we can keep that means-tested fee down as much as possible, then we want to do that. If there's subsidies that you're entitled to, and it's just the sake of filling out a form, then we want to do that. Then you can have an extra services fee. Now, this depends on the facility that you go to. Some facilities will charge what is called an extra services fee, and that could be for things like a glass of wine, a newspaper, foxtel in your room. It really depends on the facility. At some facilities, it is mandatory that you pay the extra services fee. At some facilities, it's optional. Or like you, Louise, you guys actually don't even charge that at all, which I love. Your structure, you don't charge the extra services fee, but you just allow clients the flexibility of being able to bring those extra things in if they want to.
That's right. We leave it up to the discretion of people whether they choose to have Foxtel or Netflix or a glass of wine, and they can provide those things for themselves.
Yeah, and look, it's a big cost though. That extra services fee at some facilities, it can be up to $40 a day. Now, over a year, that's an extra $10,000 a year costing. So that's
It adds up, doesn't it?
It's a really important aspect of information to get from the facilities when you're reaching out and talking to them. Then the costings can go into a little bit of complexity now, because what happens with that assessment that I was talking about with Centrelink, if you have assets under $171,000, then we can be entitled to some extra subsidies. And that RAD and that DAP that I was talking about before, the government can subsidise that a little bit for you and reduce that lump sum payment. And that is considered what we call a RAC. So it's a refundable accommodation contribution. So depending on what your assets are and the calculation with Centrelink, but we can reduce that lump sum payment that's required to move into the facility, which is a wonderful outcome. So there is a RAC, possibly a RAC payment or DAC payment, which is the daily accommodation contribution payment. So similar to that DAP payment where you have to pay what you don't pay as the RAD, so you can pay it as an ongoing payment of interest rate of 4.1. If you're entitled to these extra subsidies, they just change the name and they call it a RAC and a DAC instead of a RAD and DAP. So there's a lot of acronyms to remember, but that's why it's really important to get an understanding and see a specialist like myself so you know what fees you have to pay, but then what options there are for you to have to pay those things, and also what impact is things like selling the home going to have on those fees.
It's very individual to people, isn't it? Their circumstances are theirs personally. And I quite often get asked by people what happens to the RAD once they pay it to the facility. Now, the organisation keeps the RAD for, capital and for providing care for residents. And then once your loved one passes away, then the requirement to pay the RAD back out is to obtain probate or waive of probate through the courts and to present that to the home and to have the RAD paid back out again.
Yeah. Now, what I have done, guys, is I've done a little bit of a case study for you. So I wanted to do a bit of a case study just to outline perhaps the difference in impact on the fees when you are looking at selling your home and not selling your home. Just as a bit of an example to show the slightest change can impact on quite a few different areas with the costings. So we've used Ethel as a bit of a case study. Now Ethel has her home. Unfortunately, Ethel is widowed and she's looking at moving into an aged care facility where they're asking for that RAD of $450,000. So Ethel has a home of $800,000 and no family at home other than her. She's got lifestyle assets, furniture and things like that worth $10,000, and she has $200,000 in the bank. All right, so let's have a bit of a look at what happens if Ethel needs to move into an aged care facility and she's wondering, okay, do I sell the home or do I not, or do I rent it out? What's the income or what's the difference going to look like?
Fantastic.
All right, so what I've done here is I've given 3 options.
Okay.
The main points to look at here within my lovely Excel sheet, I'm a financial advisor.
I like the colours.
The main points we want to look at is the blue line and the green line. That's the end scenario. So option 1, which is in the first column, is Ethel not selling the home. All right, so we know she's got some money sitting in the bank and she's got a RAD that she's got to pay of $450,000. What options does she have? With this first option, what we've done is said, all right, well, why don't we use the $250,000 sitting in the bank to pay that towards the RAD, and the rest of that outstanding amount, like I was talking about, can be paid as a DAP payment. So that's the way it's looked at is an interest-only loan at 4.1%. Now, it's important to understand any money you pay towards the RAD is fully refunded to your loved ones at the end. The DAP payment is not. All right, so that's an important thing to consider. Whichever structure you go into at the beginning of moving into an aged care facility, you can change that. So if we use this example with Ethel when she first goes in, if she comes into some money 3 months down the track and wants to pay that RAD, she can do that. Okay, it's just a bit of an idea to start her off and get her into the facility of her choice. So if she pays $250,000 towards the RAD, she's going to have a bit of a DAP payment. So if we look at the blue line, we can see her cash flow coming in. She's got a little bit of money in the bank, so she's earning $1,500 in interest, and she's got her Centrelink age pension. Now, one beautiful trick to understand with the home is if you leave the home as it is not assessed for a period of 2 years by Centrelink. That asset is still exempt from being assessed. And any money that you put towards the RAD is also not assessed by Centrelink for aged care or for age pension purposes. So in option 1, Ethel's age pension entitlement is actually quite high. She's getting the maximum there, which is good. So she's got cash flow coming in of $25,768. Then if we look at the green line, these are her aged care fees. So she's got the basic daily care fee of $18,845, same for everyone. She's got a means tested fee because she's got some money sitting in the bank there, but she doesn't have too much and the house isn't getting assessed. So the means tested fee is quite low, but she also has that DAP payment because she hasn't paid that RAD, that full $450 in full. So she's got a little bit of that DAP payment there. So her expenses are sitting in at $36,600. All right, so there is a bit of a shortfall there. So you need to speak to a specialist. There are ways and options that you can look at on how that's going to be funded. Option 2, she still keeps the home, but she rents it out. How does that change things? Well, if we look at the blue line, we can see that her cash flow has gone up. Okay, and that's because of the rent coming in. So you can see she's got rent coming in now of $23,500. Her Centrelink age pension has gone down a little bit because she's got more income getting assessed. Okay. So she's not going to be entitled to as much there, but overall her cash flow is now sitting at $38,000. If we look at the fees and look how they've changed for you guys, again, basic daily care fee the same, that doesn't change. Her means tested fee has gone up because her income's gone up. So that rent, part of that rent is getting assessed now and gets included in the means tested fee, so that has bumped up a little bit. And she's still paying the same DAP payment. So her total income coming in is $38,798, and her aged care fees are now $41,575, which is a bit higher. So that's a little bit less of a deficit cash flow wise, which again, a financial specialist can sit down and talk to you about and how we're going to navigate it and what options there are to look at reducing that means tested fee. Then the final option is selling the home. She sells it. Well, if she's got all that cash, then she is able to pay the RAD in full, so that's great. What that means is she's not going to have that DAP payment. So if we look at the blue line, she's got a lot more cash sitting in the bank now. So she's got $10,000 in interest coming in. But because she's got that cash sitting in the bank, that's getting assessed. Okay, she sold the home, which was exempt, and now all that cash is sitting in the bank. So it is going to get assessed by Centrelink. So you can see that her age pension entitlement is still a little bit down. But that's giving her an income of $27,000 there. Then if we look at the fees, how does this scenario look with the fees? Again, basic daily care fee, the same. She doesn't have that DAP payment anymore because she's paid the RAD in full. But she does have quite a high means tested fee now because that house which was exempt, again, is now being assessed by the aged care facility. So her means tested fee has gone through the roof because it's gone up quite a bit. So when we compare those two, she's got cash flow coming in now of $27,000 and aged care fees of $35,000. So you want to get financial advice in that situation because you can see just from the three options of selling the home, not selling it, or not selling it and renting it out gives completely different outcomes to the cash flow and how that's going to work for you individually. Now, it is completely different for every client. Some of you may want to have cash flow as the main focus on how you pay for this. Some of you may want extra savings in the bank as how you pay for it. You might want those considerations to be taken. It really is tailored for you and what's going to be best for your personal situation and your family. But it's just a really good snapshot to show you that one simple change can give completely different cash flow positions.
That's right. That's great to see it down on a spreadsheet like that, because one of the questions I get asked by families all the time is when somebody goes into care, they panic, they're saying, we've got to sell the house to pay for this, but quite clearly it's not always the case.
It's not always the case. And I think a really important thing to remember is when you are looking at an aged care facility, you do not have to pay that RAD immediately. You can start by just paying a DAP payment automatically while you are perhaps seeking financial advice from someone like myself on how you're going to navigate the fees long term. But you just remember, you don't have to pay that.
There's not
big
really
deposit.
a rush, is there?
No,
you
there
can
isn't.
actually take your time to
You've
think about
got
things.
time to work this out and see what's going to work for you and your family.
So one of the other questions I get asked is when somebody, say their house is worth $250,000 when they sell it and the RAD's $450,000. There's a deficit in that RAD, and some of the families say to me, well, I'll just contribute the remainder towards mum's RAD and we'll just get it paid off. Is that a good idea? Or?
Really good question. I'm really glad you asked that. As much as we would all love to help our parents, and we think that that is a good option, and we're being generous, that is, to be honest, one of the bad things that we can do, because you've got to remember that if you are helping mum or dad and say giving them $100,000, that money is then going into their name, which Centrelink is going to assess and the aged care facility is going to assess. So it may decrease their age pension entitlement and increase that means tested fee. So I always strongly recommend, don't perhaps let the kids just give you a lump sum of money to help you straight away. Take your time with structuring the fees and how you're going to pay it, and always seek independent financial advice.
And we've been talking about either mum or dad going into care separately and one remaining in the home and how that works. But what happens if the main carer becomes unwell and that person has to go into care and they've been the carer for the one that's needed it, and then all of a sudden they both need to go into care on the same day? What happens then? Yeah,
it's interesting. So then as far as your assets and assessments and everything are concerned, basically the assets are divided into two as far as Centrelink is concerned.
Okay.
But that can have a bit of a detrimental impact on having to pay, both of you having to pay the full RAD,
right.
up front, and that can be quite expensive. So there are strategies that you can look at where perhaps even if one person goes in a few days before the other person, it can actually allow you, one person to go in as maybe a low means, where then they only have to pay a contribution amount and not the full RAD. So that's another interesting situation.
So what happens if they're both in care, what happens when one passes away?
Yeah, when one passes away, then that RAD that you have paid does get refunded to the person.
Okay, that's wonderful. So do you have any tips for people when they come to see you about choosing a provider, somebody that's going to suit their family?
Yeah, look, what I recommend is that it's personal choice, it really is. So depending on the location of the facility, and I always suggest that if you can, get mum or dad and go around and have a look at those facilities, see what you feel comfortable with. Obviously, cost is going to come into play to some degree. Those RAD payments, look, I have seen them in Sydney up to $800,000. So obviously, if we don't have a lot of money, then perhaps one of those facilities is not going to be the option. So we do need to look at the RAD and get financial advice and make sure that something is going to be workable, but something like location and personal choice, see where you feel comfortable.
That's fantastic. So I always tell people when they're looking to go into aged care to go and have a look around, have a look at as many facilities as you can, get a feel for what's out there, and have your ACAT assessment ready, your income and asset assessment completed, and get some financial advice. Okay, so we're just going to have a look and see if we've got any questions that have come through via text, and we do. Okay, so the first question that we have is, Sophie, how do you feel that COVID has impacted on people looking to move into aged care this year? Gosh, what a year it's been.
Yeah, it has. And in my experience so far, because look, we've all been in lockdown. In my experience so far, I have found people are quite hesitant to put their loved ones into an aged care facility. And we've all seen the devastation that happened in Victoria. So I think because of that, on the back of that, I've seen quite a bit of hesitation, but I mean, in my experience just here today, the COVID regime that you've got and the precautions and everything that you've put in place have been
Churches
excellent.
of Christ Queensland has a fantastic, robust COVID plan in place to protecting our residents. You know, that's front of mind for us, is to make sure that our residents are 100% safe.
Yep.
Okay, we've got another question here. I'm looking at options for my mum. She's not quite ready or willing to look into care. Have you got any tips on how to start having these conversations?
Yeah, look, it's a hard one. It's a difficult conversation to have with your loved ones, and it's often hard for the person going into the facility as well as the family member who needs to start bringing this up. It's hard on the family. I think respite is a great option.
It's a soft approach, isn't it?
It is. It's a nice, soft option of introducing a facility and what aged care is all about and what it looks like. And I think the important thing to remember is to make sure that they understand they're not being pushed into anything or forced into anything. I know with myself and my own experience, it was really just about, hey, having that discussion like, look, we might need to address this at some stage. Why don't we just go and have a look? Why don't we see what this is all about? You know, we're not pushing you in there. I'm not taking you and forcing you into the facility, but I don't know anything about it. And so I'd like to have a look and just making it quite a relaxed option and conversation.
Yeah, and I find with families that have had an opportunity to go around and take their parents around to, or a partner around to have a look at different facilities, that the person that they're looking for care for has actually got some ability to make some decisions for themselves, to say, look, in the event that this happens, you know, I really loved that home that we went and had a look at, and I would like to go there.
Yeah, look, that's what happened with my own mother. We were in Sydney and we went around and had a look at probably about 6 different facilities, and she picked the one that she really liked, and this was before she needed it. We knew that it might be coming. And so, you know, when it did happen, and it happened quite quickly when she did need it, it was all sorted and she knew where she wanted to go. We'd already met some of the people, and it
can
nice
take away
transition.
some of that resistance
and
some of the fear related to going into care.
Well,
thank you. Thank you all for tuning into our webinar today. You can rewatch any of these webinars in this series by visiting www.cofc.com.au/webinar. I'd like to thank Sophie for joining us all today, and we'll see you next time. Thanks, Sophie.
Thank you. Bye.